Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Florian Grummes, Managing Director of Midas Touch Consulting. Florian, it's a huge pleasure having you come down to Wall Street Silver.
Ivan, thanks for having me again. Pleasure to
Yeah,
be here.
yeah, it's a huge pleasure. And we wanted to get you on to talk about everything going on in the markets, silver, gold, see what's happening with the Federal Reserve and what will happen next with everything in the economy. And I just wanted to ask you, what the heck is going on, Florian? It seems like we're on the brink of either a stock market collapse or another regional bank that's going to go bust. What are you watching and concerned about right now in the markets?
Yeah, I agree. I mean, there is something brewing out there for sure. And obviously, most of the time, you have no clue what the next flex will be. So, but we have to be alert here. I think so far, the bank run in March, right, led to the Fed creating 400 billion over a weekend. And at the same time, you have a very expensive fiscal policy, and you have all this excess liquidity of the last 15 years still wobbling around in the system.
Mm-hmm.
So that's why the market has been rather resilient and moving higher, the stock market especially. And I think there's still a lot of capital moving around looking for opportunities, right? But at the same time, the data is getting, I mean, you can see that we are in a recession in Europe already. I think in
Yeah.
Germany, and I think it's also just a question of time when the United States will follow. But usually it takes, at least 12 months, rather 18 to 20 months once a rate hiking cycle has started, that you can see this devastating effect in the real economy. So it could be that the market still can hold up until the end of the year.
Mm-hmm. And what I know we were speaking a little bit before we started recording about these great charts that you have on silver and gold. And I'd love to get you to share them, go into what's happening with gold, what are you seeing next, either long term or short term. But yeah, we'd love you to get into those gold charts.
Sure. Let me get my presentation on.
Perfect.
So obviously, I have no clue about the future, and this is no financial advice. So let's first of all bring everybody on the same page. This is the last 23 years of gold
Mm-hmm.
price. You had this famous Gordon Brown double bottom at $250 in 2000 and 2001, when the British finance minister sold the British gold reserves at a low of a 20-year bear market.
Horrible
And
move.
yeah, and then this crazy, unbelievable bull market started. That's basically also when I started looking at gold. In 2001, I bought my first Kruger round, and gold went up 656% in just 10 years, right?
Wow.
This was before Bitcoin. And that was the decade of gold. And we had this all-time high at 1920, and more or less exactly that's where we're trading today. 12 years, 12 years later. It was followed by a severe correction back then. Gold sold off 45% in a little bit more than 4 years, found a final bottom at 1,045, and then basically climbed all the way back up to $2,075 in the summer of 2020. There was nearly 100% gain in 4.5 years. And then we've seen this double top and a severe sell-off last year towards a triple low at 1615. That was a sell-off of 22% in 2.5 years, or 2.2 years.
Mm-hmm.
And since then, gold has nicely recovered back up to this all-time highs. So the big picture, most of the gold bugs know it. Of course, it's most likely a cup and handle pattern in the making. You could, of course, draw this cup a little bit smaller like this, or wider. We have to see how it plays out, right? But generally, this is a cup and handle, and this is basically the horizontal resistance, more or less, around, let's say, $2,050 to $2,075. That's the big number that gold needs to take out. And if you look at the technical classic textbook kind of pattern, this was 2011, this is 2015, this was 2020, and we are probably somewhere here, all right, at the moment. So all it takes is this breakout. And I thought as well this summer that maybe gold now is ready. It seems that it takes another round of patience and waiting, but it will come. And once it comes, you take the depth of this cup and put it on top of the breakout, and you then wait first for a pullback towards this long-term current resistance, which will then be support.
Mhm.
Yeah, and you can calculate that gold will probably go to at least $3,500 according
Wow.
to that pattern. But this is like, let's say, a few years, right? This is not going to happen.
Yeah.
The first breakout. So once gold makes this move here, once it breaks out here, it probably goes up like this, 2,500 or something, and then it comes all the way back down to 2,100. That's your last chance to jump on the train, and then it will take off. That's basically the textbook kind of idea for a cup and handle pattern.
So that line,
So
it's gold has to break 2,000 or 2,100. Is that what's the breakout level again?
it's currently 2,075 is the all-time high from the
Right.
summer of 2020. Let's say it's a range, it's a zone. Like
Right.
I think if gold now moves back up above 2,000, it's clear what it's going to want to do. And I
Right.
think the market will only focus on the breakout. So that's actually very important to be aware of now. It doesn't take much for gold to really concentrate the focus on the breakout and on new all-time highs. Actually, we're trading at 1920, 25 right now. So if gold can take out 1985, which is the last high from July,
Mhm.
all eyes will be on the round psychological number of 2,000. Once it gets to 2,000, it's clear now it's going to attempt for the fourth time the breakout above 2,050, 2,075. So game is on basically once gold clears 1985. That's my
Wow.
thinking. So it doesn't take
That's
much.
super interesting. Yeah, it won't take much. I agree with you. It's super interesting to see it like that on the chart.
Right. So let's move on and zoom in a little bit. This is a daily chart. We had this triple low last year in October and November. And then gold rallied up towards end of January 1959, if I remember correctly. Then we had a double low in early March, and that's when the bank run in America suddenly started.
Mhm.
And basically, this changed everything, and gold rallied to 2067, slightly missed the all-time high in early May. I warned back then that this is probably topping out here. We had a nice rounding top. Gold sold off first low end of June 1893.
Mhm.
Covered towards mid of July. I think that's the 1985 I just talked about. And then we had a slightly lower low at 1885 in mid of August. So congratulations to the bears. It took them 2 months to push the gold price $9 lower. Okay, so that's also something really important to be aware of.
Right.
This initial sellout right here, I mean, this of course is painful. And that's where you get all these speculative positions flushed out of the market, basically.
Right.
But then to make another move down here, it's just $9 below this low here. And it took them 2 months. So that's something that you often see in a corrective setup in gold, that once the speculative money is being flushed out, the bears are only able to grind the market lower, basically. It's not like big sell-off. There's not a big drama in terms of price, but it feels terrible anyway. So
Right.
so that's the setup. We had another lower high, as you can see.
Yeah.
This is lower high than this one. And this was just recently in early September, and gold came down again. Now, yesterday, it made a low at $1,901, I think, and it turned around. Let's see if this low can hold. That would be a good sign. But we still have this kind of pattern here. If you draw these trend lines,
Mm-hmm.
you can see that this formation here basically is some form of a triangle or wedge kind of correction. And the classic textbook would basically say A, B, C, D, and we're still missing the E. So
So it still has to go lower.
It could still be, according to that pattern, that gold still needs to basically come. It has to if it fails at this downtrend line here, then it very likely will come down somewhere here, right?
Interesting.
If it can break out now, of course, the pattern is done, and it probably will very likely run immediately to this 1985.
Mm-hmm.
And as I said before, that's for me right now the line in the sand, where basically the focus on new all-time highs kicks in.
That's interesting.
So currently, still a little bit higher probability, I would say, as one more pullback.
Right.
Then the breakout above this, out of this wedge, and then towards the all-time highs, obviously. So this blue box here would be probably an interesting zone to add. And of course, if it breaks below this green support line here, we could go lower as well. The next support is somewhere here around 1800. I don't see it right now.
Mm-hmm.
I think that worst case right now is 1860 to 1875 probably.
Right.
So it's
And
very manageable downside from here.
Yeah.
And the upside, as we've seen before, I mean, it can go to $2,500 within a few months.
Mm-hmm.
So risk reward is amazing now.
And we were speaking a little bit earlier about the Shanghai Gold Exchange. What do you see there that's interesting, or that's that brought me to your attention there?
Yeah, well, the premiums in the Shanghai gold market are rising quite significantly. You can see here the difference between the gold price in the Shanghai free trading zone and in the domestic market is quite significant.
Mm-hmm.
Of course, any data and any opinion about China has to be taken with a grain of salt, because none of us actually speaks Chinese, so we're not really able to do our research
right
there and understand really what's going on. So we're relying always on third parties, and it's always a little bit tricky with China, generally speaking.
Mm-hmm.
But this is interesting. It seems that People's Bank of China is trying to stop or avoid capital flights. I mean, the yuan has been rather weak. If you have yuan renminbis and you can see that you're losing purchasing power against the dollar significantly, you're probably trying to exchange it. And it's obviously also clear that with this strong deflation going on in China right now, and the yuan being so weak,
mm-hmm.
will have to come up with more currency printing, significant more currency printing probably. And so that's very interesting. So far, the international gold price has not been affected. I mean, this is just a few days that this is happening. So we have to be aware of it, and let's see how it plays out. It's certainly
mm-hmm.
interesting. It could also be a consequence out of the BRICS movement and the BRICS meeting in Johannesburg. I mean, initially it seemed like it was a nothing burger, but now we see these big premiums showing up in the Shanghai gold market. So it's interesting. It's definitely
it is interesting. And we are Wall Street Silver. Okay, we'd love you to get into the silver aspect of all of this. Oh, there we go.
Sure. So this is silver the last 3 years. And of course, we had this Corona crash down here, right?
Mm-hmm.
And we have a trend line, and we have an uptrend, and we have a downtrend line. So this is obviously some form of a triangle that silver is moving in. We have also another trend line since the low a year ago, which, by the way, silver surprisingly showed up with relative strength and has bottomed before gold. Mm-hmm. Last year in autumn, and the same happened now this year in June. I think it's interesting. Usually silver is rather late than early, but it seems that this time it's different. And you had this low back in the Corona crash. Obviously, you had those two tops around $30.
Right.
You had last year in September this triple low where silver made actually slightly higher lows already. And then you have these lower highs since May, and now it's interesting what is going to be happening. If silver can hold this trend line, it probably wants to break out directly, right? Mm-hmm. Otherwise, if gold makes that move that I showed, and we're going back towards 1875, silver might take one more dip down here and test this green trend more
like
time.
$19-20 or $20 range.
Exactly. Exactly. So that would basically be my kind of like worst case scenario in the short term. So that could also be another very interesting buying opportunity down here. And again, as you can see, there's also not a massive downside risk in silver. So it's all very manageable, the downside in the precious metals now. The only caveat that I still need to share with you guys is this. So
and what are we seeing here, Florian?
it's the seasonality.
Okay.
And it's the seasonality for gold over the last 12 years. So usually I also mainly nearly always used the seasonality over the last 54, 55 years.
Right.
Because statistically, you want to have as much data as possible, right? So, but if you look at the last 12 years, what the gold market has done, the picture changes dramatically, because usually gold seasonality tends to find a bottom somewhere in June, July, and then you get a rather strong August and September, maybe a little bit of a top in October, a little bit of a pullback, but towards the end of the year, over the last 55 years, gold tend to be very strong. Right. Over the last 12 years, however, you have a clear pattern that starting in September, gold is very weak into the last FOMC meeting mid of December. So it could be from that perspective that we have another 3 months of rather challenging times in front of us, okay?
Interesting.
And again, it doesn't mean that we have big downside, but it could be this grinding lower that we basically have seen, especially in August, might just continue. That could be something, because, I mean, the markets look ahead 6 to 9 months. And so far, the Fed has not signaled a pivot. Right. But it will come, and it will very likely come latest in the second quarter of next year. And if gold looks ahead 6 months, starting mid of December could be the right time to start pricing in this change in monetary policy. And that could be, in my opinion, the latest start for this breakout movement. But it could happen earlier as well. So generally, I'm very optimistic. I just think be a little bit careful in the short term still. 1985, if we take out that number, I'm super bullish.
Yeah, absolutely. It's what a fascinating thing to see and walk through with you, Florian. It's such a huge pleasure. I just want to thank you so much for coming down to Wall Street Silver, and hopefully in the next 2-3 months, as the market develop, we'd love to have you back on.
Yeah, it would be a pleasure. Of course. You're welcome.
Awesome. Talk to you soon, Florian.